Good evening everyone. Welcome to JAIIB CAIIB English Medium channel. Hope you all are doing well. So today's session is all about your PPB, Principles and Practices of Banking, in which we will be talking about your unit number 25, and unit number 25 actually talks about the types of collateral and their characteristics. Okay. So this is going to be today's topic of ours, module B, unit number 25 we are going to discuss today, in which we will be talking about what are the different types of collaterals are there and how the bank makes sure that the loan will be secured. Secure loan means simply we are saying that we are trying to make sure that all the loans that bank is providing is secured and the bank do not have to face any kind of financial risk or any kind of liquidity risk because of these loans. So that's what we are going to discuss today. So I hope you all are very much aware about mortgage, hypothecation, pledge and all the other types of securities we talk about. So I guess every one of you is very much aware about that. So let's start today's session with the module B, unit number 25 of PPB we will be discussing today. Okay. So when it comes to today's topic that talks about types of collateral and their characteristics, so definitely providing a loan is one of the very big tasks of a bank, right? In which bank is providing loan to the customer, and that loans are the assets of a bank. Whether it's an advantage, whether it's a loans, they both will be the assets of a bank. When bank is providing loan to someone, there might be possible, like every loan covers some minimum risk of default. A normal risk of default is there with every type of loan that bank provides to its customer. So bank have to secure themselves from such kind of risk, and for that bank actually take some collateral or security while providing the loan, and that's what we are going to discuss today. So let's start with the basic understanding of the chapter. So you can see lending is a very risky business. Okay, definitely lending is what? It's a very risky business of a bank. So, and the credit risk forms a major risk for the banks. Credit risk is also called as a default risk. It's a type of risk in which customer have not returned the money of a bank which they have taken as a loan. That is called as a credit risk, or we can call it a default risk. When the customer defaults and do not provide the loan of a bank to the bank return. Okay. So repayment is not done by the customer. That's a default risk, or that's a credit risk we can call. So there are several factors that could lead to the default by the borrower. In order to mitigate such kind of default risk or credit risk, one of the measures adopted is obtaining from the borrower the certain assets charged to the bank as security for the repayment of the credit facility extended. So we know that this is a kind of risk that can happen with any bank, with any particular bank or financial institution who are providing credit facility to the customer. They might face this default risk or this credit risk that the customer are not repaying the loan. Might be after 1 year or 2 year or 3 year from the starting of the installment, the customer is not paying the loan. So that creates a credit risk for the bank, default risk for a bank, that might convert itself in a liquidity risk or a financial risk for a bank. So that's why bank want to be secure while they are providing the loan to the customer. And that's when the concept of security or collateral came in the credit facility extended by the bank. Okay. Now next we are talking about here that in order to safeguard the advances or the loans that banks provide to their customer, in order to safeguard the advances, bankers normally take securities on which they fall back when any borrower commits default. If any borrower defaults and do not repay the loan of a bank, then the bank actually use that security or collateral to recover their funds. Okay, so typically bank finance is used by the borrowers for the for the creation of some types of assets, either for their business purposes or the personal use. And for multiple reasons, the customers take loan from a bank, definitely. Now we have that the assets created out of bank we are talking about here, that the assets created out of the bank finance as per normal banking practice is invariably taken as security. And besides, often banks call for any other assets that owned by the borrower or the third party as a collateral security. Clear? So simply we can say that banks secure their loan by taking the collateral, by taking the security from the customer or owned by a customer. And also there are some cases or there are occasions when bank extend credit facility without any tangible security. being available. So that results in a clean or unsecured loan. The clean loan or unsecured loan we can simply define as that type of loan which do not have any collateral or security provided to the bank at the time of providing loan. So banks provide loan to the customer in by taking security, by taking collateral. Apart from that, bank also provide loan to their customer without taking any security. And without taking any security, when a bank provide loan to the customer, it comes under the unsecured loan. Okay, that's a part of unsecured loan. Now, next we have here effectiveness of security. Next we have what? Effectiveness of security. So definitely the effectiveness of security would largely depends on the nature of the security, like what nature of securities we are actually using to cover our loan, that will define. Like if we talk about mortgage, that's a immovable property. Mortgage is what? It's an immovable property, and definitely the immovable property will be differently acting on the recovery of loan, and every type of security covers the different kind of security for a bank. Like in case of pledge, hypothecation, lien, assignment, they all gives a different percentage of return of money. It's not a guarantee that if you have a security you will recover the whole amount of loan, no, but definitely the type of security have a different type of effect on the recovery of loan. So the major requisites of a good and acceptable securities are defined here. That first, the borrower should have good title to the security. If any goods the borrower is giving as a security, definitely the borrower should have the title of that security. It have to be there. Now, next, the asset should be easily identifiable. The asset should be easily identifiable to the bank, and it should be easily used. So the security should be easily and freely transferable. The bank should not take such kind of security or such kind of collateral which are not easy to transfer, which are not easy to convert into cash. Okay, so because the main objective of taking the security, like if the customer defaults, the bank still have something to recover their loan or to recover their amount. That's why the security should be easily and freely transferable. Next, we have here that it should not have any encumbrances or liability attached, like example, partially paid shares. That also covered here, like no such kind of encumbrances or liability should be attached, whether it's partially paid shares. Okay, apart from that, the next points that have been defined to us is that the ownership of the asset should be absolute. Okay, the ownership of the asset that the customer is giving as a security to the bank, it should be absolute. Also, the security should be easily marketable, like you can easily sell that security, easily anybody can purchase that security. Assets without wide price fluctuations are preferable. Like if you say that I am going to take a loan from a bank, but I am ready to give the shares of a certain company as a security, the shares are very fluctuation, the shares price are very fluctuative. Every day we are seeing that the share prices are changing, and that might affect the chances of the amount that bank can get out of that security in the future when the customer don't pay the loan. So definitely such kind of security should be there whose prices are not that much fluctuative. Okay, now the market value should be easily ascertainable. Like if you are taking any kind of assets or security as a collateral, then you should be capable of identifying the value of that product easily. And it should be easily available. It should be possible to store the security in secure manner in case of pledge particularly. Pledge actually covers those kinds of security whose possession will be given to the bank. Okay, in that case, definitely it's important that the proper storage of that security will be done. Like for example, in pledge we have a gold, and the gold definitely requires a storage facility that the bank have to maintain. If the bank do not have to secure those golds which they are taking as a security, definitely they are not allowed to take the security of gold. So the security should be durable for a reasonable period of time. So these are the certain features we are talking about which should be there in the acceptable securities. Okay, next. Now, types of security. In practice, the securities offered by the borrower are of various types. So they can be immovable asset, it can be movable, it can be actionable claim financial assets, it can be intangible assets. So these are the types of securities that we are using as a collateral. Immovable property, we always know it will be counted in a mortgage. Movable, it can be pledge, it can be hypothecation, it can be lien. Actionable claims and financial assets are simply your assignment. Intangible assets can be your assignment. So these are the type of securities we use generally in the banking system. So whatever may be the nature of a security, movable, immovable, whatever, the banker, while accepting it, have to ensure the certain factors. Like the first factor is it is saleable. The banker have to make sure that whatever property they are taking from a customer, that property is saleable. Like if the customer do not repay the money in the future, we should sell that property and recover our money. So that have to be assured by the bank. Like before taking that security, bank have to assure that. Then whenever required to do so for recovery in case of default by the borrower. Now the value of the securities is ascertainable at any time from reliable sources to enable determining the drawing limit and assessing the saleable value of the asset. That have to be taken care of. Now its value is reasonably stable and not subject to wide fluctuations, and depending on the volatility, banks fix the percentage of margin also. So next we are saying that the value should be reasonably stable. Like there should be no that much fluctuation in the prices of the value or the value of a product. Okay, not subject to wide fluctuation. We don't want a wide fluctuation. We don't want the price changes regularly. We want a kind of reasonably stable property or the asset to be as a security. And next we are talking about it is easily transferable without, as far as possible, going through a legal formalities. Like should not involve a lot of legal formalities to transfer the property at the time of recovery. So that's what we are talking about here. Okay. So classified as primary and secondary also. Securities are classified as a primary security and secondary, or we can call it a collateral security. So primary security is the assets against which advances is made. Okay, so any kind of assets against which advances are given to the customers, that is called as a primary security. For example, it can be stock of goods, so the sales receivable, the machinery, and it also those assets on which margin of security will be applied. So that's a primary security. Then we have a collateral security. It is a security of any other assets of the borrower or of a third party. So the securities are also divided on the basis of the primary and collateral security. Okay. Now the types of collateral and their characteristics. So there are lot of types of collaterals are there that the bank take from the customer to provide the loan, and they have a multiple classification that we will be covering in this chapter in detail. Like the first one is land and building. So you can see when we talk about the land and building here, type of security we have land and building. Definitely it's an immovable property, so it will covered under the mortgage. So the type of charge will be created here will be equitable mortgage or the registered mortgage. Now the types of valuation, the bank's approved valuer will define the value of a land and building. Then registration of charge will be there, possible only when the property is freehold and non-encumbrances. It means it should not be provided to someone else before it provided to bank. Like it should be a property which have not been already given as a security to someone. Okay, so it should have a freehold, it should be having a non-encumbrance certificate, search report, and prior sale deeds should be gone through properly. In case of companies, the charge should be got registered with the registrar of the company. Okay, so these are the registration of charge we are talking about. Then possession of security, simply the title deeds remains with the bank who is providing the loan. That's what the land and building we are doing. Okay. Now next we have plant and machinery, the other type of collateral we can give. It comes under the hypothecation because that's movable. So the types of valuation, whatever the original invoices are saying and whatever the depreciation value of that plant and machinery happened will be calculated as a valuation of a property. Now registration of charge in case of companies, definitely the same should be got registered with the registrar of companies. And possession of the security, the physical possession remains with the borrower, with the borrower's bank and the constructive possession. And banks have what? Banks have a constructive possession here. Now stocks are also counted in the hypothecation and pledge. Both are movable. Hypothecation and pledge both are movable. The only difference is the possession in hypothecation remains with the borrower and in pledge it remains with the lender. That's the only difference. So market reports, newspaper invoices, they all will be covered here. And by way of obtaining inventories and stock reports at regular intervals, it will do as a registration of charge. Next, physical possession remains with the borrower and the bank has an equitable charge. And in case of pledge, physical possession remains with the bank in an independently accessible store. So, as I have told you, pledge and hypothecation both are movable, but in hypothecation, possession remains with the borrower. But in pledge, the possession remains with the lender. Okay. Next type of collateral we have is railway or lorry receipts or airway bill, and we can say bill of lading. So these are the pledge of receipts or bills in full set of issue. That's also a pledge. So valuation will be the invoice of their, okay, and by way of delivery and a valid endorsement through not legally required, but railway or transport authority should be notified for the registration of the charge. And the possession, documentation of title remain with the bank who is providing the loan. In case of we are providing LIC policy, that comes under the assignment, because LIC policy is a kind of actionable claim. It counted under a actionable claim type of security. So definitely it's assignment. And the surrender value certificate issued by a company will be the actually type of valuation. Now, if we talk about registration of charge, by a way of assignment in favor of the bank will be created, and the original policy remain with the bank here. Okay. Now, National Savings Certificate, Indira Vikas Patra and other government securities are there. They are also pledge of security. The face value plus the interest rate will be given in these security will be counted as a types of valuation. And the bank endorsement of transfer assignment in favor of bank will be taken as a valuation of charge. Original securities remains with the bank here. Okay. So this is the type of securities we have. Apart from these, we also have bank's own term policy, like FD. So pledge, it is also face value of the fixed deposit plus the interest will be counted. By way of assignment, it will be taken, and original document receipt remains with the bank. That's a term deposit. Term deposit simply means that FD or RD policies. Now the gold ornament definitely pledge because the possession remains with bank. Like newspaper weight certificate approved by the jeweler will be calculating the valuation of the property, of the gold. Then registration of charge, delivery of possession will be counted here, and the jeweler is kept in the jewelry is kept in the safe custody with the bank. So as we discussed that bank should have a proper storage value, like bank should be having a proper store where the bank defined these all gold ornaments or any other pledge securities will be stored. Then UTI, share of approved companies we have, that's also pledge. UTI is Unit Trust of India, that's a mutual fund. So the valuation will be on the basis of newspaper and SEBI approved agents and brokers will be counted. Letter of pledge, blank transfer deeds and dematerialization will be taken for the registration of charge, and the certificate remains with the bank here. Okay. Now these are the certain types of security that we have. The major difference, confusion is between the hypothecation and pledge. Like if we talk about the legal provision, section 2N of securities, or we can say Sarfasi Act, actually talks about the hypothecation, and section 172 of Contract Act 1870, Indian Contract Act 1872 talks about pledge. Definition, we know a charge is or in or upon any movable property existing or future created by the borrower in favor of a secured creditor without the delivery of possession, because in hypothecation possession remains with the borrower. Okay, so property to such creditor as a security for financial assistance include floating charge into fixed charge or immovable property. Clear? So hypothecation, the possession remains with the borrower. And in case of pledge, it stands for the bailment of goods as security for payment of a goods, of a debt or a performance of a promise. So the customer have promised that we will return your loan after 5 years. So if the customer have not returned the loan of a bank after 5 years, definitely the bailment will be taken by the bank. Okay. Apart from that, you can see parties involved. The borrower will be called as a hypothecator and bank will be called as a hypothecatee. When it comes to the pledge, borrower is a pledger or pawner and bank is a pledgee and pawnee. Okay. Name of securities, that hypothecation is movable, pledge is also movable. Then nature of charge, we have hypothecation, equitable and floating will be counted. They are equitable and as well as floating. When it comes to pledge, it's legal and fixed also. Now rights of ownership will be in the hypothecation remains with the borrower, in pledge also remains with the borrower, because we are talking about ownership. We are not talking about possession. In case of possession, in hypothecation it remains with borrower, and in pledge it remains with the lender. But ownership always will be the customer. Okay, ownership will always remain with the customer. Now right of sale, through the court of law, and private sale after giving reasonable notice. So this is how the hypothecation and pledge will be defined, and the differences is defined between the two. Because see, when we talk about mortgage, mortgage is very simple. It's an immovable property. So we don't have that much confusion about the mortgage. When we talk about actionable claim, definitely assignments are there. The major confusion is between pledge and hypothecation, because both are movable and both includes like a stock of goods and all, but still they both have a difference. Okay, so I hope this difference is clear to all of you. When we talk about the delivery of goods in a hypothecation, the actual, it can be symbolic, it can be constructive, but in pledge it's not there. Then limitation period for hypothecation, it will be 3 years, but in pledge no such kind of limitation period is there. In general lien, you can find that it is, in case of hypothecation, it's not available to perform the general lien, but in case of pledge, it is available. Okay, and degree of care have been given, like the borrower to take care of the hypothecated goods, because they have the possession, so they have to take care of the goods till the end of the loan recovery, till the loan account close. But in case of pledge, the bank is bound to take care of the goods, because bank have taken a possession in case of pledge, and the possession have been taken care by the bank, and definitely the bank have to take care of everything. Okay, it's not the responsibility of a customer now, it's a responsibility of the bank to secure those assets. Okay, so this was the types of collateral and their charge we have discussed today. I hope you remember these, understand these, because that's a very basic concepts of banking, like the creating security and charge. Okay, so that's all for today. That's not sufficient. In detail we have to cover all these type of security with each and every type of goods and services we are providing as a collateral, that we have to cover in detail. What charge will be created and what possession and other rights will be given to which party. Okay, that we will cover in the detailed classes. That can be your officers batch, which is going to start from 2nd of August, or you can have your MAHAPACK or the individual subscription batch, which will help you out to get properly detailed study of each and everything. Okay, so for that I would suggest, if you are going for any 3 subject or all the 4 subjects of JAIIB, then go with JAIIB MAHAPACK. And if you are going for any individual subject, okay, 1 or 2 subjects are remaining, then go with the simply your subscription batch of that subject. So this is how you get maximum available with you to prepare. Okay, so that's my suggestion to all of you. If you are going for any 3 subject or all the 4 subjects of JAIIB, then go with the MAHAPACK. But if you are going for any 1 or 2 subjects of JAIIB, then go with the individual subject subscription. So how to enroll? Just download the 24/7 application, go to the home page, select the exam category JAIIB November, then click on view all option. When you click on the view all option, you will find all the batches, like MAHAPACK is there, officers batch is starting from 2nd of August, that is available. You have a subscription batch also available, so check that out. After checking, click on the product, do read all the conditions and all the offerings of the product, like live classes are there, mock tests are there, ebooks are there, video courses are there. When you scroll down, the detail of the product will be available, and it is available in every page. Whatever product you want to buy, the detail of that is available in the page. So just scroll down and read the details. Then click on the buy now option and enter a code here, that will be Y496, and apply. So once you apply, you get here 80% discount, but 1% additional discount will be given to you if you purchase the same from our 24/7 application. Okay, so 81% discount, double validity will be available on the MAHAPACK, and all the other products will have 81% discount right now. So if you want to enroll soon, so that you will be able to get the benefit of this. And if you find any doubt at the time of enrollment or any other problem you are facing, you can always talk to us. You can drop your queries in the comment section. We will check your comment and we will answer you definitely. Okay, so that's all for today. Thank you all for joining this session with me. We'll see you all in the next class. Till then, take care everyone. Do not forget, from 1st of August we are having our JAIIB registration started. So do remember, we have to register for JAIIB in the first week of August only. Okay, so that's all for today. Thank you all for joining this session with me. See you all in the next class. Take care.